It's the UK budget today. How much room for manoeuvre has the Chancellor of the Exchequer? Joining us now is Tom Stevenson, Investment Director at Fidelity International. Tom, first of all, what do you expect to come out of this budget?
Well, I think it's going to be a pretty quiet budget, actually, and the reason for that, it will threefold, really. The Chancellor is painted into a corner economically. The money just isn't there. He's painted into a corner politically. He has Brexit looming on the horizon. He has a lot of enemies on the benches beside and behind him. And I think temperamentally, he's quite a cautious Chancellor, and he simply can't afford to have another mess up like he had in the spring with the national insurance fiasco.
And of course, one of the things about the fact he hasn't got any money, one way to solve that problem would be to push up taxes, push up the amount of money he's receiving from those on PAYE, those from other areas where they're paying taxes. Is this not an option?
Well, it is an option, but it's a risky option, and this falls into the politically risky category. He simply, with the government not having a majority and being reliant on the support of the DUP, he simply can't afford to alienate the core constituency of supporters. So I think tax rises on things like pension contributions, yes, they're a possibility, but I think he's quite unlikely to go down that route today.
And of course, there's the VAT element as well. I've been reading reports recently that potentially we could get some further adjustments to those that he fell over 6 or 8 months ago with those in small businesses and those that are small employers where they have problems. In that occasion was the national insurance. This time around there's some suggestion VAT could be brought down from 85 to 20,000 for the point at which they begin to become VAT registered.
That's right, and that would bring the UK into line with the rest of the EU. It is, however, a big reduction from 85,000 to 20,000, and it would be extremely badly received by small businesses. And I think for the same reason that he had to have a U-turn on the national insurance in the spring, I think it's quite unlikely that he'll go there either.
Let's take a look at some of the big sectors. Banks. Could banks come out of this better or worse? Do you think there's a trade to be had on banks going into the budget?
I don't think so, because I think that the banking sector is actually quite low on his list of priorities. I mean, the thing which will really help the banking sector actually would be a raise in interest rates to widen those profit margins. That's not really in his hands, so I wouldn't be focusing too much on the banks. I think actually his main area of focus needs to be on productivity. That is the big problem with the UK economy at the moment, and if he's going to boost productivity, he needs to focus on infrastructure spending, so construction companies may get something today. He needs to focus on transport, and he needs to focus on connectivity, sort of broadband and that kind of thing. So I think there will be a big focus on productivity in those areas.
That's edging into the area of tech. We're all talking about tech for a number of different reasons at the moment. More money going to technology companies?
Well, I think more money going to technology companies if they are involved with the basic infrastructure of technology. So technology companies which use that infrastructure may be less of a focus, but what we really need to do is get a more efficient, more effective infrastructure in the country.
And that's only done by spending money, the old Keynesian way of doing it, and bringing in these big projects for which they've got to pay money. Yes,
and that's the big problem for the Chancellor, that he set himself a target of reducing the budget deficit to 2% of GDP by 2021, and indeed by wiping it out by the middle of the 2020s. He gave himself in the spring budget a buffer of £26 billion. That, however, is going to disappear over time because of the productivity problems we've talked about, reducing economic growth, reducing profitability, and therefore reducing tax revenues. So, the money is not really there. So if he's going to spend in one area, he's going to have to find the money elsewhere.
And of course, the consumer is already under pressure. You mentioned a rise in interest rates we've had. Wages are not going up at the rate inflation's going up. So he's got a problem there as well. So he can't really help the retailing sector, for example.
Yes, that's right. I mean, pay is going to be an issue. And I think what we might see today is some easing of the pressure on public sector pay. So we've had this 1% pay cap. That's beginning to crumble at the edges. I mean, I think that we will see a bit of movement there. We're not going to see a movement towards the 3% inflation level, so therefore most consumers are feeling progressively a bit poorer as each month goes by because their earnings are growing more slowly than inflation. But I think there will be some movement there. So at the margin, that does favour things like restaurant groups and retailers, sure.
What about house builders? This is front and central policy for the Conservatives. You've seen a lot of initiatives through George Osborne, Help to Buy and so forth. This continues to pump up the price of housing. What is the Conservative Party through Philip Hammond going to do today to help those that want to get on the housing ladder, and ultimately, presumably, the house builders will benefit?
Yes, that's right. I mean, this combines two of the other main focuses for the Chancellor, which is, the broken housing market and young people, for whom the Conservatives are really of little interest now. Probably the Conservatives are less interesting to young people than they were since I was a young person, back in the 1980s. So he needs to focus on those two, and I think the combination of those two might appear in some measures to help young people get on the housing ladder. We might see some stamp duty reductions. I think we may see some more incentives for house builders to reach his target of 300,000 houses a year. So, of course, that will ultimately help the house builders sector. So it might be a reasonable day for them today.
One of the big shadows that's really affecting all of policy at the moment is the discussions with the European Union and Brexit and where it goes. And of course, when a budget's put together, it's not just for today, it's for the next few years and so forth. So obviously he's got to have one eye on what's happening there. Anything that's constraining him because of these Brexit negotiations going on? Well,
I mean, his principal problem with the Brexit situation is that temperamentally he doesn't really believe in it. He was a Remainer, and I think he remains a Remainer, and that puts him in a very delicate situation with regard to his colleagues on the benches behind him. So he's going to have to be very careful that he doesn't antagonise that particular constituency.
Okay, all right, Tom, it's a pleasure. Thanks indeed for dropping by. Tom Stevenson is Investment Director at Fidelity International.